Hi, everyone. Welcome to this event hosted by the Work on Climate community as a part of our Climate Investor Series. For any attendees that are not familiar with Work on Climate, we're a nonprofit focused on making climate work mainstream. And we are home to the world's largest climate community where we support our members with events like this one and also with mentorship programs. You can come join us at workonclimate.org. My name is Utkarsh Vaidya. I lead the events team for Work on Climate. I'm also the CTO for Agritech Climate Venture, which is a pre-seed venture as well. And because of our recent focus on pre-seed fundraising, I know how challenging and complex the climate tech VC space can be. So related to that on a personal note, and also related to our objective as an organization to demystify the climate VC space, it is my great pleasure to introduce Matt Ward from the 4WARD.VC Climate Syndicate. Matt's an experienced entrepreneur himself, and he's a long-term startup business coach experienced in helping founders take their startup or early stage venture to the next level with strategy growth and fundraising tactics to scale bigger, better, and faster. Welcome, Matt.
Hey, thanks for having me, Utkarsh, and thanks everybody for tuning in.
The floor is all yours, Matt, to tell us a bit more about 4WARD, your personal journey, how you got here, what 4WARD does, and how the syndicate model is different from your traditional run-of-the-mill VC model.
Oh, goodness. Okay. So I'll start where we're at today, backtrack a little bit, and then go into what we're working on. So just as a quick overview, hey guys, my name is Matt Ward. I run 4WARD.VC. So we're early stage climate syndicate. We focus on Europe, North America, and Israel. And we have around 130 LPs. I've been building this group and this network for about a year now, after working with startups on strategy and growth, a lot of B2B, a lot of SaaS, and realizing none of this really matters. I want to do something that frickin' matters. I want to make an impact. And that's when I started 4WARD.VC. That's when I started the startup tank. So a lot of you have probably seen Shark Tank, Hodidoro, and Dragon's Den. We run every 2 weeks a climate Shark Tank with the startup tank. You can just check it out at thestartuptank.com. My goal has always been in this space to bring more collaboration and funding into climate. So to backtrack a little bit, I studied mechanical engineering at Georgia Tech. I found out fast I wasn't working for a big corporate, and I got into early e-commerce and specifically crowdfunding. Built a crowdfunding podcast, only to find out if people are raising money, they don't have jack to pay you with, and ended up getting into starting my own companies, e-commerce, Amazon FBA. I did that for a few years, but really, I never found that to be meaningful. I wanted to do something that mattered. I wanted to work with startups changing the world, because I think entrepreneurs are the ones that can do that. The builders, the creators, and then the people behind those teams, the people like the work on climate community. And that's kind of where I'm at today, is with 4WARD.VC. We're putting out lots of resources to help better connect the funding and the startup landscape when it comes to climate. We've made a climate VC database you guys can check out. I'm sure it'll be in the show notes. We have a climate Slack community for climate tech founders. And what we're really looking for are incredibly awesome teams tackling massive problems in really outdated markets that are either growing very quickly or kind of laggard and really could use some innovation. It's a little hard for me to do an introduction just like this. I'm kind of stuttering a little bit on where to go. So what questions do you have for me, Utkarsh? And then I can maybe go a little bit more from there with some direction.
Yeah, definitely. And, this is a pretty open forum. So anyone on the call that has a question, you can just raise your hand digitally on Zoom, since I'm only looking at Matt right now. And we'll call upon you to ask your question yourself, or you can put it into the chat as well, or DM me directly if you would like me to ask it anonymously. I guess let's focus on the team portion of it itself. So I'm always interested in learning how you mentioned awesome teams. How do you quantify awesomeness as a metric?
The awesome part about it is you can't quantify it. It's something that's just there or it's not. So I can walk you guys through first, before I walk you through our framework, just quickly for anyone who's new to the space, what is a syndicate? A syndicate is like a VC firm, except without the capital. We have lots of LPs, angel investors, that can invest on a per deal basis with us. So that means we go out, find incredible companies, the winner founders, so to speak. We secure allocations, and then we syndicate the deal out to our investors. And then we typically invest 100 to 500K into those companies. And that's just a quick overview. We'll set up an SPV. It makes things fast, simple, easy for both the startup and the investor. And then we're on the cap table and bust our ass. I hope we're allowed to swear here. Bust our ass to help the startup succeed. Now, what we look for. So I mentioned kind of the 3 T's. So there's the TAM, so a massive market. We like to see billions, like lots of billions, and growing well. Something that's possible now, but wasn't possible 2 or 3 years ago. Because if it was possible 2 or 3 years ago, why has no one done it? There's probably a pretty good reason. And then team, the wild card and the most important. And in my experience, and with pretty much all the investors I've spoken with as well, in venture is an absolute exponential game of winners. You have the fund returners, the massive outcomes, the Ubers, the Airbnbs, the Facebooks, and then you have everyone else. And it really boils down to just extreme winners and average. And average is failing in the venture game because so many startups go out of business or don't become large enough to make the venture numbers work out. So what do we look for when we say winners? For me, there has to be something extraordinary about the team. And that can be a lot of different things. And a lot of times you can't really explain what it is, but something about that person, maybe it's their sales and charisma, and they could convince anyone to join the team or to buy the product, or et cetera, et cetera. Maybe it's the technical co-founder who is just a god when it comes to programming or creating product or some type of AI optimization. Maybe it's something where they're incredibly good at recruiting people. Maybe this is the ex-Navy SEAL person who's gone through something incredibly hard in their life, the immigrant who's had to leave with the clothes on their back and now wants to make a new life. Something about this person, when you meet them, you kind of get the hair on your arm stands up a little bit. And regardless of what it is they're doing, you would bet on them. Be that a marathon, be that a fight, be that a card game, a cooking competition, whatever it is. That's kind of what we like to, and what I like to look for, because we bet on big markets with great people.
Yeah, that definitely makes sense. And so you mentioned the syndicate model. I wanted to delve a bit deeper into it. So how do you triage the opportunities themselves? And then also, how do you participate on the investment side of it? So if someone's interested in not the entrepreneurial part of it, but rather in the investment part of it, how does one go about participating in the syndicate?
To be honest, syndicates are probably the best way to get into angel investing, because it allows people with means, so be that entrepreneurs or your well-earning doctor, lawyer, dentist, etc., to invest in companies, but not have to have the whole network built out, not have to have the 100% of the expertise. It allows them to sit in, so to speak, on a venture firm and see the types of companies they're looking at, understand, read through due diligence. So for us, we get a ton of applications. The startup tank has been very good for us. We have hubs in the top 20 tech cities outside of China around the world, and we get hundreds of applications, probably close to 100 applications a month just for that. And that's for them to come on to pitch to a panel of climate VCs and also pitching for funding for us. Filtering through that is a process of looking at, okay, the company, the pitch deck, how does it fit into these different thoughts that we have? How does it fit into maybe the theses or the sectors we're focused on? And then if we do find founders that we like, I go back and forth quite a bit with them with questions, and then we'll set up a call. If it's a good call, then, and we like them, we'll dive deeper into that, try to do some digging into the market to better understand that and get as deep as we can in the technology and due diligence. For us, what that means, a typical fund is going to be big and have large management fees and a huge team. That's not us. As a syndicate, you essentially don't pay anything to invest unless you invest. So it's basically just carry or small management fees, which means that we have to be lean and mean. And how we do that is I spent the last year connecting with 700 plus funds, incubators, and accelerators in the climate space. And we leverage that network heavily in our due diligence, looking for companies that either A, already have really strong lead investors on board that we trust, know, and like, or B, if they're fund companies that we're absolutely kind of off the wall about, we go out and actively try to recruit in the leads and other investors into the round. So regardless, we're going to be I like to say we'll be the biggest hustler on the cap table for the company. We won't be the biggest check, but we will be the one who's out there kind of beating the bush, introducing them to 20, 30, 40 investors, corporates, et cetera. But we also use that and leverage that in a bit of our due diligence to get deep into the tech. The other advantage of a syndicate is we've got 130 or 140 professionals with their own networks and their own expertise. We certainly rely on them as well for due diligence. They were incredibly helpful in the last deal we did, an Israeli battery tech company that takes charging batteries from 8 hours to 8 minutes, cheaper, faster, no pollutive lithium or cobalt in the composition, and they last 30 times as long. So that's the kind of stuff where it is very deep tech. I can only get so deep, but with our team and everyone in the syndicate, all the investors, everyone is incentivized to help make the companies win. So the whole is stronger than the sum of its parts, so to speak.
Yeah, that definitely makes sense. And so I think that maybe something that's quite an interesting aspect of this is this idea of Shark Tank for climate ventures. A question around that: can you walk us through the anatomy of one of those experiences from the venture side? So how do they get in? How do they go through it? How are the conversations conducted? And how do you bring together these investors around a single investment?
Yeah. So from the pitch session or the startup tank side of things, that's all public. So you guys can check that out at the startuptank.com/YouTube. We're also on all the major podcasting platforms. But what that looks like is we have 6 companies on every 2 weeks, generally Monday at 5 p.m. CET, alongside 2 to 3 top climate funds, folks like Uber Morgan, Extantia, Future Energy Ventures, Lower Carbon Capital, all names you would know if you're in the space. So the companies get 5 minutes to pitch, followed by 10 to 15 minutes-ish of Q&A. All the companies are ones that have gone through our process. They're ones that I've dove deep into back and forth with the founders, and they're companies that I would say these are interesting and worth looking at. At the end of the show, we'll pick a startup of the night between the investors. We'll vote to see who is kind of our favorite and the most promising. That doesn't mean there's going to be an investment coming from there, but the companies generally set up meetings with both the VCs on the panel, and then a lot of times other investors they're tuning in will reach out to them and want to set up meetings. We have something around 1,000 viewers per session at this point, about 100 of those being live. So it's okay. And then in terms of when we do decide to invest, so after we've gone through the due diligence and we know this is a company we want to invest in, I get secure an allocation of anywhere from 100 to 500K, generally 100 to 200K-ish range. And then we'll syndicate that deal out to our investors. So I'll have a mini memo walking them through kind of the quick hits of the company and the deal, followed by a longer memo that really goes deep into the team, the company, the technology, the round, all of the due diligence. Investors get those emails. We run everything through email and through Valbon. We don't use AngelList. We found they're a little bit lower quality and kind of commoditized, but that's another story. So investors will see each of the deals, and then if they want to be in, they say, yes, I'd like to be in. Here's how much. And if not, they say no. And then we go from there. We set up an SPV. We use Valbon, which is a service provider for setting up SPVs. They're based in the UK. They make things fast, simple, easy, help with KYC, AML. We get the deal done. They set up an entity. Investors wire the money. We wire to the startup. And then we go to work, busting our ass to help the company succeed.
Yeah, I think that's quite illuminating. Let's switch gears a bit and talk about your journey to this goal. You briefly mentioned it earlier, setting at Georgia Tech. How did you end up sort of working on this kind of work?
Real roundabout. So I mentioned the crowdfunding podcast. So I was living in Southeast Asia at the time, and I designed a laptop case that opened into a standing desk, and I moved to China to work with a factory there. And between design and prototype, I had so much free time because no one spoke English. I was in a very, very Chinese kind of outskirts area that I had so much free time. I knew people that were manufacturing products online and in China, sorry, and selling to the US and Europe, i.e. Amazon FBA early 2015 days. I figured if they can, so can I. Turns out I was right. I started a home and garden company, Planted Perfect. Alongside that, I had a podcast, FBA All Stars, walking people through how I built the business. I hated that everything in this space was a make money online crash course type deal. And I said, look, here's my diary of how I'm doing it. Copy me if you want to. That went really well. I had the tagline, step 1 to 7 figures. It was a bit of a marketing joke until halfway through the year. It wasn't a joke. I sold the business on an earnout deal to a Chinese investor, ran a trade company between the US and China, and I was set, I thought, to start investing in companies. So I started investing. I made a couple of interesting early angel bets. I started a podcast. So I had another one at that point, a new one, the Syndicate. That was my way of meeting the top angels and VCs and learning the ins and outs. Interviewed 150, 200 VCs, was building up a syndicate, investing in companies. And then Trump put his tariffs in place between the US and China. The guy who bought my business was a Chinese investor that ran a trade company between the US and China. He disappeared to go save his main business. My earnout suddenly didn't have a pilot, so that plane crashed itself real well. And that's how I got back into working with startups on the strategy, the growth hacking side of things. So that was really kind of what I brought into the table, was my background of copywriting, sales, strategy. Kind of my Bible is How to Win Friends and Influence People, the book by Dale Carnegie. And that's kind of what I like to bring to the table with startups. I've probably interviewed 700 startups, 800 startups on various podcasts, and learned a great deal. And then that combined with working with companies, you start to see different patterns of how companies can grow and scale effectively using strategies from other areas. And then I did that for a couple of years before I was tired of doing stuff that didn't matter. I wanted to do something that made a difference. I wanted to do something that you could be proud of, or I could be proud of. There's 2 tests when it comes to your career, in my opinion. There's the grandma test. So can you tell your grandma about what you're doing? If you can't tell your grandma and you'd be embarrassed about it, you probably shouldn't be doing it. That's test 1. Every career needs to pass that. And then test 2 is the kids test of when you tell your son, your daughter, or somebody else about what you're doing, do you feel proud about it? That's the test I'd never gotten to. That's the one I'm trying to get to now. And that's why I decided, F it. I'm done with this. I'm going all in on climate. I'm going all in on making a difference. And I won't lie, it's also a little bit of the ego thing. It feels good to do something that is actually doing good. And that's kind of why I started this and why I went down the path of building forward.
Yeah, I think definitely that does resonate, I'm sure, with a lot of people in the audience as well. I don't think you're kind of even though the journey might be a bit uncommon, I think that the motivations are fairly universal, that we see with a lot of people. The frustrations are universal as well. For the audience, please feel free to ask any questions. I see that we have one right now, but feel free to jump in, raise your hand and we'll call upon you, or you can put it into the chat as well. Nishant, do you want to take it away?
Hey, yeah. Hey, thank you so much for the presentation so far. I'm looking into starting a company in this space. And obviously, everyone wants to play to their best strengths, and that's what you want to do at all points. But just operating within the practicalities of what it takes to get a company up and running. Not all of your strengths are going to be drawn upon. Not all of your teammates' strengths are going to be drawn upon. So, as a VC, what do you see people do in order to reinvent themselves and keep themselves current when they're not playing to their strengths, but they're in a new space that's out of their comfort zone, but they're still have enough to get in, but then they need to grow a lot to evolve and take it from there.
I think a startup's a trial by fire. You're jumping into something you probably haven't done before, and you're figuring all of that shit out. And there's no one you can outsource things to. It's you having to learn everything and execute. And that's what I would say is play to your strengths is one thing, but there's a difference between playing to your strengths and playing to your experience. And I don't think you have to do what you've always done, but I do think you have to know yourself well enough to know what you're good at and what you're not good at. There are certain things I'm not good at. I'm not a super details oriented paperwork kind of person where I can get really deep into the weeds of this is what needs to be done for filing taxes and setting up entities. And that stuff is just so I'm almost talking in German. Sorry. That stuff is so tough for me. So I need to have those type of people on my team or be able to outsource those type of things. At the flip side, my strength is hustling and trying new things. And when it comes to that, I would say know what your strengths are and take advantage of them.
Thank you.
We have another question from Michael. Michael, would you like to ask her yourself, please?
Yeah, absolutely. So Matt, I'm interested in investing in the space. I'm brand new. I'm part of the climate-based fellowship right now. So learning a lot, trying to get a sense of where I might be able to make a difference and pass that test, with my granddaughter when she asked me what I did. But more importantly, I wanted to find out how can I become involved in one of the syndicates as far as investing? Because again, I know enough now to get myself in a lot of trouble, but not enough to really make an impact.
Mm-hmm. That's how it works. Nothing I say is solicitation. So if you happen to come over to our website, you did so of your own accord, and I wasn't convincing you to go there. We're 4WARD.VC with the number 4WARD.VC. There are some draconian laws when it comes to angel investing, depending on where you are. So there are certain limitations. In the US, you've got to have a net worth of at least $1 million outside of your primary residence, or an income of 200 grand a year per year for the last 2 years.
So that's an or an and?
An or, you don't need both.
Gotcha.
And the rules change, or they depend based off of where you are. They're different in the EU, different in the UK. So I would recommend that you look up the accreditation laws where you are. And even if you don't qualify as accredited, there are some platforms where you can go and do more crowd equity funding. I would say you'll find much higher quality deals with a syndicate than you are going to find on a crowd. My experience is generally crowdfunding platforms are kind of the lowest common denominator when it comes to startups, because they couldn't clear market with traditional investors, so they go there. So I wouldn't necessarily recommend you go that route, but it is a route you could go. The other way that you could go if you're not accredited is you could play the game of an advisor angel, so to speak. So you find great companies and you help those companies in exchange for some equity into the companies.
Right. All right. So not soliciting, it's 4WARD, the number 4WARD.VC?
4WARD.VC.
.VC. Okay, sounds good. Thank you.
I was lucky enough to be able to put my name in there.
Appreciate it.
Yeah, we invest in companies that move the world forward. That's our tagline.
I like it. Thank you.
Of course. Thanks for the question.
So a general market-oriented question for you, Matt. So given recent economic turbulence, what new trends do you see emerging for early investing, pre-seed, seed, and so forth? I've heard some folks say that the ticket sizes have gotten a bit larger, as investors get a bit more tighter with their purse strings. Do you think that that's true? Any other trends that you see?
You mean ticket size is getting smaller?
Some folks were saying it's easier to raise a larger amount of money as opposed to a smaller amount of money at the moment, so they can get fewer deals. But that might just be anecdotal, specific to them. But I've heard that opinion a couple of times.
I think it definitely depends on the sector as well. So a lot of tech has been getting killed the valuations are way down. I mean, everything was inflated because the Fed and all the governments were printing way too much money. So inflation was going out of control before they realized it. And all that money was pouring into stocks, which made the markets huge. That's changing quickly. With climate, the valuation decreases haven't been as large as they have been in other spaces, because in a lot of other spaces, they were kind of nice to have things. In climate, there's the companies hadn't been overvalued or overhyped quite so much, and B, they're just absolutely necessary. It's not a SaaS software to make you more efficient. It's not a next social media app. It's save the world or die and make money doing it. So I haven't seen as much of a drawdown on the climate side of things, but yeah, I definitely do see that. When I talk to founders, I tell them, take lower valuations, take more money, because you want to have a long runway. Don't play the aggressive game. Make sure you can be conservative and you've got a nice long 18 to 24 month runway, because you have no idea what the heck the world's going to look like in the next 12 months. And there's a good chance that it looks a lot worse than it does today, funding wise. And wouldn't you be happy if you had the money to not have to worry about it because if you get through those, the truth is the great companies come out of hard times because that's when everyone else dies. So they have the space to then explode with less competition and really, really iterate and grow. So the companies that can do well now, that's where the opportunity is for investors, because the valuations are lower. But that's also where the opportunity is for companies, because they will be in the position, if in the next 2, 3, 5 years it's a little tough, if they get out the other side, they will be sitting pretty.
Yeah, that definitely makes sense. And so maybe thinking about the past year or past 6 months, in your experience looking at all of these companies, do you have like any examples of companies that have navigated this environment particularly well? I mean, not naming names, but what were some of the things that companies have done to try and navigate these turbulent waters?
Yeah, I would say, so one company that we just invested in, Exion, an Israeli battery tech company, they were targeting, and they were probably good for a higher valuation. And then things were dragging along. They wanted to get the valuation. They wanted to get the funding in. They wanted to get more funding in. So they actually dropped the valuation down a decent bit and had to put in more money and split the investment into 2 separate tiers. So we invest now at kind of the stage they're at, and then there are 2 separate milestones. And when they hit the second milestone, we put in the second check, but the second check being also at the same valuation as today's valuation. So it's kind of de-risking our investment, allowing us to put in money now. They can get some and then make further progress, and it's a lower risk situation for us. Investors like things like that. I've also seen a lot of companies. So I advise a handful of really promising companies. And I mean, one of the companies was looking for X valuation 5 months ago, and I've kind of been talking them down, and they're down like to 50 or 40% of what the valuation is they were looking for. And that's just what's happened in the market. And a lot of times founders don't want to believe that. And sometimes you have to just look in the mirror and say, yeah, what you believed yesterday it doesn't exist anymore. You're not raising at a 20 or 25 million valuation. You would be lucky if you get a 12.
Yeah, that definitely makes sense. And as far as from the investor standpoint, how have you changed the way that you look at opportunities to invest in as the markets have changed over the past 6 months? Are you looking at different factors now compared to the ones that you were looking at like a year ago?
I would say for us, it hasn't changed a ton because we're relatively new to the space. So we weren't doing a lot of deals 6 months ago, and a year ago we were really just kicking things off. I've angel invested in the past, but in terms of our climate syndicate, we weren't doing any deals a year ago. What I was doing instead was building the network. I was still getting the deal flow, and I was just sharing all of the top deals that I was seeing with other investors to build up karma, build up our network. Our goal with 4WARD.VC is to be the most connected and helpful investor for early stage climate companies. And that was our way of building karma. And hopefully maybe others will pay it forward at some point.
Yeah, you do shed light on this on your website, but just for the audience, I wanted to ask you, when folks participate in the syndicate itself, do they participate in every single deal that you conduct, or portions of it?
It's all totally optional. So they sign up at 4WARD.VC/syndicate. They can find out more details. And then when we syndicate deals, so we're doing 2 deals now. I can't really give you more information, but we're doing 2 pretty awesome deals now. What we do then, the companies, I create the memos. I send out information to the investors. If they want to participate, they say yes. If they don't want to participate, they say no. Everything is opt-in, not opt-out basis. So unlike Google, where everything is tracked unless you change your settings, this is nothing is in unless you decide to be in. So it makes it super, I mean, it's kind of a no-brainer for most angels, because then they can see the deal flow, they can decide if they want to be in, and they can learn kind of on the job. It also allows you, being in a syndicate, to write smaller checks. Typically, if you wanted to be an angel investor, you're going to be lucky if a startup lets you give them a 10K check or even a 25K check. They want to see bigger numbers just because they're putting you on the cap table. There's all the effort that goes into that, the paperwork. With a syndicate, our minimum is 3,000. So you can, I recommend investors spread their bets quite a bit more. You want to have at least 20 to 40 companies in your portfolio, because the majority of them are going to fail. And unless you really get to the right portfolio size and composition, you're really extra heavily weighting your risk there. So I would say spread the investments around. And that isn't really doable if you're writing big checks, unless you have a real big bank account, in which case we should talk anyways.
Yeah, with regards to a lot of the tax advantages and so forth that are very country specific, how do you manage like funneling deals for certain geographies, or for folks that are investing with you that are located in certain geographies? Like, do you provide any sort of triaging for that, or any help with that?
We don't provide any triaging for that. So I know the UK has a great investment scheme. There are a couple of other places that have a great investment scheme. And at the same time, we get investors in those geographies to invest in other geographies as well, even if they may not be as tax advantaged. And basically the way I explain that to them is, yes, that in the UK, you can write off 30% of your investment on your taxes, and that's great. And it improves your returns XYZ. But if you invest in a company and it goes 10x, and you miss out on the company that was going to go 100, 200, 300x, your 30% is not a big deal. We're talking about a very, very big pie. And it's kind of like missing the cake because it forgot to have a cherry on top. I tell people, yeah, everything that I've learned in this space is you want to be in the winners, because the winners are massive, and it almost doesn't matter what the terms are. Obviously it matters, but if you're in the true generational companies, it doesn't matter.
Yeah, that I think that analogy is quite perfect. The cake without the cherry analogy. Switching gears a bit to something that Nishant asked about earlier, he mentioned that he's thinking of starting a venture in the climate space. For folks like him that are in the same boat, thinking about starting new ventures, thinking about entering this sort of climate space from the entrepreneurial side, how should they go about prioritizing the opportunity itself, right? So are there things that they can do to determine how attractive the opportunity will be from a venture capital standpoint? Should that even be a major consideration, when you're first thinking about what to work on, or should you think about what the biggest problems are and focus on that, and then try to fit it into like the VC model? What advice would you give folks like that?
I think it depends. There's 2 very different. So there's the bootstrapped business model, which is the businesses I've typically built in the past. And that's very different from the venture model. If you do decide to go to venture route, you need to know that you're getting into this for the next 8 to 10 years. I think average, 6 to 8 years. You're going to have massive pressure to grow and scale. It has to be something that can it has to be something that can be worth at least $1 billion. You need to be tackling at least $1 billion TAM, ideally larger. You need to move fast. You're going to need to raise money, scale. And there's nothing wrong with that, but you also need to know that that's going to kind of be, in a lot of ways, your life for the next several years. And it comes with all of the advantages of success and all of the pitfalls of failure. Alternatively, if you go more on the bootstrapped or the self-funded or the more sustainable way of growth, you can build something that's still incredibly large and meaningful, but it involves a different mindset of how you look at it. Maybe it's venture debt, maybe it's growing slow, or maybe it's cash flow in the business. I would say before you decide, you should decide which direction you want to go and which is right for you. A big reason I think to look at is, what is your reason? Why are you doing this? What does success mean for you? In general, I would say for most people, it probably makes sense to join a startup first before starting their own, or at the very least to get very deep into the space to understand more. The other thing I would say is, why do they want to be a founder? Do they want to be on the cover of magazines? Do they want to be making a difference? A lot of times when I coach founders, or when I do coaching with Venture Lab and some other advisor programs as well. And a lot of times I'll talk to a founder and I'm like, why are you really doing this? You want to be in the industry and you want to create an impact. Why don't you go join a startup that's doing this? Because they're already further along than you. You can have more impact. It'll be easier. It'll be less stressful. You won't be pulling your hair out quite so much at night, and you'll have a team. So a lot of times it's better to potentially go that route, or you could be maybe a service provider or someone who's involved in the space, but not really a startup per se. I think there's a lot of ways to look at it. If someone's seriously interested about it, then I would see what they're really interested about and explore that and see maybe where there could be a startup there or how they could get involved. And then to kind of jump in first on the side in their free time, kind of as their side hustle, and then see if they want to turn that side hustle into a real hustle.
Yeah, that makes sense. You mentioned that you work with a lot of founders in various capacities, and you've seen different motivations, mixes of motivations for these founders in terms of why they want to be founders. Are there any character traits or specific types of motivation that you see as pretty closely correlated with actually succeeding, or is it fairly random?
I would say there's three things. I would say, and people hate it because I'm very honest, but I would say the two most powerful indicators of success, of true massive success, are ignorance and arrogance. You've got to be ignorant enough to think that you can do it, because it is pretty much fucking impossible. It should not be doable. The massive businesses that people built, that is inhuman effort. That is not something that ever should be done. It's 80, 100-hour weeks. It's disrupting massive industries. It's stepping on toes. It's doing the impossible. They say in science, progress happens when the old guard dies. And that's kind of what this is because they don't have those false beliefs of something can't be done. They're ignorant enough to believe it can, and they do it. And that's one. The other side is arrogance, because everyone's going to tell you you can't, and you have to be arrogant enough to say, you're wrong. I'm better than you. I'm better than this, and I'm going to prove it. And those are two kind of controversial points, but I think that having a bit of both of those is critically important, because if founders knew how hard it was, they'd never start, the ignorance part. And if founders weren't arrogant enough to think they could do it, they'd never continue. The other thing that I think is incredibly important is the passion, the why. Why are you doing this? Because if you don't have a really strong why, it's going to be real tempting to quit all too often. It's kind of like, I'm a person where I like to have certain rules, like I don't drink coffee. I don't drink soda, or I don't do sweets, because if I did, it's just so tempting every single time to do it. And it's the same thing with a startup. It's going to be so tempting to quit. Is this the time to quit? Is this the time to quit? Startups are a roller coaster. You've got to have a really good why to hold on, because otherwise you're going to get off at one of the easy stops.
Yeah, I think that's, that's very insightful advice. I know that you've been involved in several of these types of bootstrapped efforts as well. What are things that you learned from them? Like, were there particularly pivotal moments for you in your own journey that like taught you something new about entrepreneurship that you hadn't previously considered in your definition of entrepreneurship?
I'd say I started out in the bootstrapped world. I've never been good at hiring or building teams. That's my weakness. It's absolutely my weakness. I can get a lot of things done, but I'm not good as a team builder or a leader. And that's something that I definitely learned. I sold the business after a year. It was kind of like a dare deal. If I had kept it for several more years, it would have been a much bigger, larger, more successful earnout. That was a mistake, but I didn't really realize that. Not doubling down on a specific thing and having too many projects has been a weakness of mine. It still is a weakness to this day, but at least now everything I'm building kind of is within the climate ecosystem landscape. I'm kind of trying to build the whole landscape on both sides of things that I've learned that are incredibly important. Yeah. Find your thing and focus on your thing, and don't quit too early, and get great people around you, and know your weaknesses, and to know your strengths, because the strengths are important too.
Yeah, I think thank you for those. I think those are all fairly insightful points. We have a question from Nishant again. Go ahead, Nishant.
Yeah, Matt, I think the best way to ask this would be using an analogy. So when I'm stuck in traffic and I'm in my lane, I look at the other lane and I see all these cars passing by, and then I decide it's time to switch. I jump in there. The moment I do so,
Shiny object syndrome.
right, and the other lane starts moving. And so in terms of pivots, when do you, because unless you dedicate yourself, you're not going to gain traction and not going to validate whether what you're going after is this promise or not. But at the same time, you can't just stick to the lane that you're in, and sometimes you do need to pivot. What's the balance between those two, and how do you navigate that?
I'm a fan of the horse blinder strategy, and I might have created this. I don't know where it's from. I think you need to look where you want to go, put blinders on, run real effing hard, and then come up for breath every so often and look and see if you're still headed in the right direction. If you think you're still headed, you continue or you course correct. But that way you're not giving yourself too many options to continuously run in circles. You're making progress, and you might change the direction of that progress, but you're making progress and learning.
Gotcha. Thank you.
Any other questions from the audience before I ask what usually is our final question?
Dun dun dun.
All right, so Matt, usually what we ask folks, actually it's a two-parter. So firstly, how can the community, the broader climate community, help you in your mission, since you share so much insight with us on how we can do better, right, at our goals? And finally, the second part, which is, do you recommend any specific media, books, podcasts, anything that you found really helpful for the broader audience? So how can we help you?
Mm-hmm.
And how can we better help ourselves through different sources of media?
Well, in terms of how to better help yourself, I think there's some great podcasts out there. There's a lot of great Slack communities as well. You could join ours if you're interested. 4WARD.VC/startup Slack. We've got a climate startup Slack in there. Podcast, I'm sure you know. There's My Climate Journey. There's a bunch of other ones. I like Pod Snacks is a little kind of newsletter that pulls together the best from the climate podcasting scene. A pro tip, I would say, if you're not accelerating your podcasts, you probably should be. If you increase them 10% every time, suddenly you find yourself listening real fast. When I listen to English podcasts, I would go like 3.5 speed and understand it. And that's just kind of slowly doing that over time. It helps you to kind of rip through a lot more information. I would say if you start to get bored of something, find something else tangentially helpful to what you're doing. And then other ways that are other good sources of media. I mean, this isn't media, but we published our climate VC database. So if anyone's out there is looking for funding, looking to join a fund, or looking to better understand the space, just forward.vc/VC database. Other things that I found very valuable or interesting. I can't give you any of the German. I've been listening to podcasts in German lately. I live in Switzerland, so improving my German's a big hurdle for me. So I usually listen to podcasts in German. And then in terms of things that the community can do for us or for me, well, if you're an angel investor, I'm not soliciting you, but you could certainly go to 4WARD.VC and learn more about our climate syndicate and what we do. And if you're a founder looking for funding, thestartuptank.com. Would love for you to hop over there, apply to pitch, or if you know other people that are looking for funding or interested in the space. We try to keep it fun, light, and interesting and valuable for people. Other valuable things, if you know any awesome startups that need funding or help, always send them our way. If we don't invest, I'll do my best to try to forward them over to the right people and help them succeed. And then just take action on what we're doing. Our goal is more funding and success for climate companies. I'm pretty sure that's the goal of everybody here. So find your thing and go hard for it. And I like to say we're all on Team Planet together, so why not try together?
I think that's a perfect note to end the conversation on. Thank you so much, Matt, for joining us today. I know it's quite late for you over in Switzerland, so thank you so much for joining us and sharing all of this wisdom with us. For those of you that are encountering this event from YouTube or other sources, it was hosted by the Work on Climate community. You can find us at workonclimate.org. Thank you, everyone, for attending, and thank you again, Matt, for being with us today.
Yeah, it was fun. Thanks for everybody. Thanks for the questions, and look forward to seeing you guys at future Startup Tank events and in the Slack channel. Keep up the good work.
Thanks all. Have a wonderful rest of the day.
Cheers, guys.
Bye.